The high price of bad credit. We've already mentioned that a poor credit history can result in the inability to get a loan, and since very few of us have the cash available to buy a house or car outright, the inability to get a loan means you'll be forced to say goodbye to any hope of owning a home and/or the car you really want to drive. Besides a mortgage loan, bad credit can also mean the inability to get a credit card or to purchase needed household appliances on credit. But even if you're fortunate enough to get a loan at all, lenders will charge you much higher interest rates on that loan. What does that mean to your finances? The best way to illustrate is to look at an example. Let's say you're shopping around for a car. You compare models and prices and are just lucky enough to find the perfect car selling for a bargain price of $20,000. Now you check with several lenders and find one willing to grant you a 60-month, 5-year car loan. Now, if you had good credit, you might have been charged 5% interest with a monthly payment of $377.42 a month. But because your credit is not so good, you may have to pay 11% interest instead, and your monthly payments will be $434.85 a month. So over a 5-year period, you'll have to pay $3,445.80 more in interest than you would have had to pay otherwise because of a poor credit history. That's nearly $3,500. That's a lot of money by most people's standards. But what if your credit was really bad? You'd probably be looking at an interest rate in the 22% range and monthly payments of $552.38. Bottom line, over the life of the loan, you'd have to pay an additional $10,497.60 than if you had good credit, all for the same car. Think that's bad? Hold on to your seat. It gets a lot worse. Suppose you've just found your dream home and negotiated a purchase price of $125,000. Next, you found a lender willing to give you a 30-year loan for $100,000, 80% of the purchase price. If you have a good credit history, you might get an interest rate in the 6% range. But what if your credit isn't so good? Let's do a comparison. With a good credit ranking and a 6% interest rate, your monthly payment would be $599.55. Cost of bad credit? Nothing. With a poor credit ranking, you might have a 9% interest rate and a monthly payment of $804.62. Cost of bad credit? $73,825.20. With a bad credit ranking, your interest rate might be 12%. Then you'd have a monthly payment of $1,028.61. Cost of bad credit, $154,461.60. That's right. A bad credit history will cost you a shocking $154,461.60 extra over the life of the 30-year loan. That's more than 1.5 times the amount of the loan itself, and for the same house. Starting to get the picture? But it doesn't stop there. Some employers may consider your credit history when evaluating you as a potential employee. A bad history can result in your inability to even get a job. Some insurance companies make the same checks. You might be unable to get insurance at a reasonable price solely because of a poor credit history. So far, we've only dealt with the tangible aspects of bad credit. The non-tangible aspects can be even more devastating. Money problems can have a disastrous effect on personal relationships, and bad credit is often at the heart of those problems. What's more, bad credit and the problems it causes can, and often does, bring about feelings of stress, depression, a sense of shame and hopelessness, and a loss of confidence and a feeling of worthlessness. Unfortunately, in spite of the financial and emotional pain brought about by credit problems, most people have come to accept this situation as something over which they have little or no control. But happily, that just isn't the case. We'll be looking into some of the issues that can be addressed, which in many cases can help to alleviate one's credit problems. Now that we've talked about the importance of one's credit history, let's delve into how lenders, employers, insurance companies, and others go about investigating your credit history.